Welcome to the Daily Report, or welcome back to the Daily Report. Tonight, we have an exclusive interview with the chairman of the Nairobi Securities Exchange. He discusses the performance of the Securities Exchange linkage in the continent and what to expect in the coming year with our very own Natasha Wairimu.
Let's fast forward 1 year and take a look at the performance of the Nairobi Securities Exchange in the financial markets. And we are lucky to have the chairman of the Nairobi Securities Exchange, Mr. Kiprono Kittony, who will shed light on the performance of the exchange. From market upswings to downturns, he will debunk the issues that have shaped the performance of the exchange. With me, Natasha Wairimu. So, Mr. Chairman, let us start with the upside. The Africa Securities Exchange Association held its 30th meeting. So what do we expect to see in terms of exchange linkage in the continent?
First of all, thank you, Natasha, for inviting me this morning to speak to your viewers. We had an extremely successful conference last week at the Kempinski Hotel, the African Securities Exchanges Association. We hosted 45 delegates representing 29 exchanges with a market capitalization of $2 trillion US. And the conversations around there were centered around mobility of capital with the African Exchange Linkage Program. It focused on inter-African trade. It also focused on how to combine our strategies for enhanced listing across Africa and the exchange of information amongst exchanges in Africa, because we are facing a lot of challenges as frontier economy exchanges. So it was a momentous occasion presided over by our president. And the linkages program is actually warehoused in Nairobi. The secretariat sits at the Nairobi Securities Exchange. And we were able to even perform a live trade. President Ruto did a live trade with a company in West Africa buying some Safaricom shares in real-time basis. So it's a really great occasion for us to demonstrate also that we have the technology, and the association has received a lot of support from the African Development Bank in realizing this dream.
The privatization of state-owned entities, which will be listed in the stock exchange, is good news to the capital markets. But do you think it's the right time given what is happening globally in the markets?
I think that the Kenya Kwanza administration needs to be lauded for really the determination to see the deepening of our capital markets. And President Ruto in particular, when he took power, one of the first places he visited was the exchange, and he has been to the exchange now a total of 3 times. And on all 3 occasions, he's reiterated his support on increasing listings by state-owned enterprises. You must remember, Natasha, that globally exchanges have also been really supported by the listing of state-owned enterprises. A good example is Euronext in Paris. Euronext in Paris actually was formed by the listing of French and other European utilities, and today is one of the most vibrant exchanges in Western Europe. And the Nairobi Securities Exchange, of course, has had its golden years during the Kibaki administration, when there was a flurry of listing activity. And the fact that the privatization program is back, I feel, should be supported, and it enhances the democratization of wealth. It gives the local investing communities a chance to own a stake in companies that were previously in the hands of government. And I think there is no argument about the fact that if many of these enterprises, if they were taken outside the ambit of government, would have better governance. They'll have boards that are democratically elected based on competencies. There'll be less pressure for people to appoint their cronies and run them for rent-seeking activities, as has been the case in the past. So I think the timing is perfect. I think that it is a real show of confidence in the fact that the market can be deepened. We've always had a problem, and I've said this many times. There's more money chasing products than there are products for the money. So there's been a mismatch. So you see, like the big investors from New York, from London, whenever they're looking for stocks here, they find that there's very little that they can buy. And right now, if we can get companies like Kenya Pipeline come to market, for sure, we'll be in for better time, and the financial sector in general will have an upswing.
Nairobi Securities Exchange was at a point reported as the worst performing securities exchange. So what's your take on this, and what do you think it means for the local investors?
First and foremost, I think it is a misnomer. That was reported by the Morgan Stanley market index, and they based their finding on the NSE 20 share index. And the NSE 20 share index is just one of the parameters of measurement of the performance of the market. And as you know, we have the all share index and we have the NSE 5. So if you measure it against the other two parameters, that would not be the outcome. So I wouldn't want to look at it in terms of its absolute performance. Notwithstanding, we encourage investors, particularly Kenyan investors, to take advantage of the low prices. I mean, Safaricom at 13 shillings is an absolute steal. Kenya Commercial Bank at the current rate is an absolute steal. If you compare the underlying enterprise value, the underlying asset value of those companies and the price per share today, it presents a huge investing opportunity. So I wouldn't want to take that too seriously. I mean, the markets, as you know, ebb and flow. You've heard of bear markets and bull markets. We're in a bear market for an extended period of time, and obviously we would want to, not dwell too much on that. Yes.
The Kenya shilling depreciation against the US dollar has been a headwind, more so for investors in the broader emerging markets and developed markets. Now, do you think the foreign investors will come back once the shilling finds a new footing?
As you know, that Kenya faces, like many other frontier economies, and by the way, let me emphasize that the challenge of a depreciating local currency is not unique to Kenya. Ours has perhaps oscillated a little bit faster and farther than other emerging markets, but it's not a unique phenomenon. I think Kenya's had a very easy ride since independence. I mean, and I'm sure even if you did a bit of benchmarking, you will find that is the case. We've always had a very stable currency, so we've been used to that sort of a fact of life. So right now, when we've seen an oscillating shilling, people are tending to go into a state of panic. The debt pressure, the fiscal pressure in our economy has really presented a big challenge to the shilling. And but if you look at the amount of money that is required to service our 9 trillion shilling debt, it is far too much. And at the same time, if we look at our import-export equation, there is a big challenge because our exports hardly match our imports. So that situation naturally will lead to, a depreciated local currency. The other factor that comes into play is the geopolitics. I mean, we hadn't anticipated the big challenge in the Middle East with the Israel and Palestine situation, the war in the Ukraine. Those have all tended to cause a problem, and also the high interest rate regime in the strong Western economies, particularly in the United States of America. At the moment, global investors are tending to prefer to place their money in fixed income securities in what they refer to as safer havens. Now, I would like also to challenge the media, and I did that previously. You see, one of the things that Africa is not good at is saying its positive stories. We're very, very focused on the negative. So you see, no one is going to buy in if we are busy selling doom. So I would want to encourage that we now start to create a narrative that these prices are low and it's a good time to come in. But I'm certain that with the peak of the interest rates, high interest rate regime in the West, we're going to see a flow of funds back to the frontier economies. Finally, I think it's absolutely crucial as an economy that we start to enhance our dollar revenue through an export drive.
What's your take on the performance of the BAOs year to date?
My overall take is that we close the year on a very high note with the ASEA conference, with the reassurance that the privatization is back. We also, you heard our chief executive, Mr. Odundo, say recently we have 2 private companies that are listing early next year. We have, many of our products like the ETF, the exchange traded fund, which is premised upon the value of gold, doing very well on the exchange. We have companies like some of our our investment banks. Recently, we had Standard Investment Bank list as Sukuk, which is really, in my opinion, a sign of the dynamism in this country, the fact that we're able to come up with new products, the fact that we're able to live through these very difficult times. And I would say it is absolutely the best time to invest. We are very excited about the proposed privatization program that has been now ratified. And I just hope that Kenyans will take advantage of this to enhance their financial literacy and also their investor sophistication. So we are really, in my opinion, headed to better times.
What strategies should institutional investors deploy to navigate market downturns?
The tendency of institutional investors is always to, during turbulent times, shun risky investments like equities, and they tend to go more into fixed income securities like bonds and treasury bills. But I would want to ask institutional investors to broaden their investment scope so that they can also give equities a chance. Because without that, then what happens is that those who will bring companies to market to list will not find the demand pull. And when there's no demand pull, then it will have a downward pressure on the price of the equities. That will then tend to discourage companies that are planning to list. So my message, and I want to say that we have been having very robust conversations. We have a capital markets roundtable that is chaired by the chairman of the Capital Markets Authority. It brings the fund managers in place. It brings the REITs Association in place. It brings the exchange. It brings the CDSE Corporation, and basically all the stakeholders. And we've been having a lot of meetings also with government. And I think we are all on one page. We know what needs to be done. The fund managers know what needs to be done. The investment bankers know what needs to be done. The exchange knows what needs to be done. The National Treasury knows also the measures that they need to take to create more vibrancy in the capital markets.
And apart from privatization of state-owned entities which will be listed in the stock exchange, what more should we expect to see?
In 2024, I am hoping that we are going to see a stabilized shilling. I'm hoping that we are going to see a more predictable tax regime. I have had a meeting recently with the Commissioner General of the Kenya Revenue Authority, and he told me about a whole raft of measures that they're taking to create a more predictable policy environment around taxation. I'm hoping to see the agricultural sector resurge because we've had a lot of rains this year. The El Nino rains have come in and created some damage and some havoc, but at the same time, they've also created a lot of productivity from agriculture. You know, agriculture is a key sector in our economy, and it's one of the factors that raises our gross domestic product. So I am optimistic that we're going to have a better 24 than we've had the 23.
After 6 years have passed and another fiscal year comes to an end, the Nairobi Securities Exchange continues to display remarkable strength amidst economic challenges. But it is a resounding plea to all individuals to recognize the potential benefits of investing in the stock markets. My name is Natasha Wairimu, and I wish you all happy holidays.